this, very briefly, and I'm not going to waste time. I'm just going to do it from how I saw the market, from daily time frame down to 1 hour time frame, down to the 15, down to the 3 minutes, and down to the 1 minute, right? So it's more like a top-down analysis on GBPUSD. Okay, so let's see. I'm going to clear my chart. I'm going to make it as a replay too, so you're going to see how I cut everything I did, how I did it. All right. So first of all, on the weekly time frame, this was on Tuesday. I called this trade. So on the weekly time frame, this is the week currently, currently forming. On the weekly time frame, price is supposed to go bearish on the weekly time frame. Why is that so? Now, whenever price clears a buy side liquidity or a sell side liquidity, it sinks back inside. Like, I'm going to make this example. Now, this is it. The reason why we always have higher highs and higher lows is because whenever liquidity is being taken, price sinks back inside. That's the stop point. So here becomes the point that haunted traders. Okay, sorry, let me set this. Here becomes the point that what haunts traders out of the market. All right. Why is it hunting traders out of the market? Because some traders are trying to buy the breakout, okay, and their stop loss is below, so they get stopped. Some traders are going to try to sell. Sorry, not sell. Most price action traders always want to buy based on break and retest. So breakout traders are in, their stop loss will be hunted. Break and retest traders will be in at this moment, maybe after seeing some candle rejection. Always know that when price is moving, it does not move like a straight line. You don't expect it to move like a straight line. Meaning, while it's trying to come down, you could see rejections forming, like 1, 2, and that will get so many traders involved, and their stop loss will be hit. Where you see the speed is when price has gotten below. You see the speed it is and hits their stop loss, because it's just a manipulation. So it always happens fast. You get? Now we have some set of traders that will be trying to sell here based on resistance level, okay, because when price approaches, it's had some reaction, they sold stop loss here, hunted them. So this is why smart money tries to push it up, bring it down. All right, so that's the same thing happening on the weekly time frame. We just saw its high is taking out slightly, and you see price is coming back down. So let's see. We are trying to see a bearish week, and another reason why I think it's bearish, because of an order block sitting here that price is likely to come for, and a fair value gap also here, like where price is trying to chase. Okay, so it looks more like a weekly, a bearish week. So on the daily time frame, what am I saying? Okay, on daily time frame, this is the liquidity grab we talked about on the weekly. So I'm trying to refine it to this high. You see that price just broke out of it, and price is trying to sink back down. Okay, so that's how. Now, judging from what happened on Monday on the 5th, let's assume we have not seen this on the 5th. Okay, so this candle is Tuesday's candle. Let's assume we are not seeing it. So this is the grab, this is the sink. So I expected it to sink further down because of the fair value gap we have here, which price should mitigate. Okay, that fair value gap is important, and there's an order block also below this order block here. Important, right? With this order block waiting here. So yeah, there are multiple reasons why a price should be bearish on the daily time frame. So let's see what 1 hour is showing us. So looking at the 1 hour charts, okay, looking at the 1 hour charts, we see price has changed character. So we saw this Monday high, low, higher high. Currently on Monday, I lost my trade. Why? Because I was expecting a higher low and price to take off, but that didn't happen. That kept going down. So today the trade was clearer than it normally is. So what happened was that I tried to on Tuesday the trade was clearer, the trend was clearer than usual. So this went up. When I saw this, it retraced, and also we had a lower low. So there's a change of character, meaning price is trying to shift bearish. So on this Tuesday, all I was looking for was a bear move. I was not looking for any kind of bullish any kind of bullish move anymore, because it's more like this, and then price try to retrace to make a lower high, and then we want to see price fall down. Okay, that's what I wanted to see. So seeing price change character here, I was like, okay, good. This is the change of character. This level broke structure, now it's trying to pull back. So all I was waiting for was my Q zone. So on the 1 hour, I just marked my liquidity, right? Marked previous day high, okay, and marked low of the day, and marked Friday's low. Also, all these are liquidity pools, right? And then I marked this buy side liquidity too. I just left it there. So what I did was to draw my fib. So since we are seeing a bearish move, I'm going to draw my fib to understand the daily range, right? So I'm going to draw from this high down to the low. Remember, it's from body to body of the candle. Wicks are not involved. So this red line is the 50% of this whole range. That's half of my range. So if price touches the red line or price goes a little bit above, I'm going to sell once it's my Q zone. So all I'm waiting for is for my Q zone to start, which is 7 a.m. Eastern time. That's New York Q zone. So I just want it to start. And when it starts, I want to see price go higher. Okay, I want to see price go above this red line, or just touch this red line, or anything that I would consider that as a good retracement. So what happens is that, so watch this successfully happen. So watch this successfully happen. I look at the 15 minutes charts and also look at what's going on. So my Q zone, since my Q zone is, set this back. Yeah. Good. So since my Q zone is 7 o'clock Eastern time, I'm going to use vertical line to mark it. Remember, this is GBPUSD, so my Q zone is not supposed to be 8:30, it's supposed to be 7 o'clock. Why? Because this is currency market. So I'm just waiting for my Q zone to happen, and then I see a liquidity grab. Now if the liquidity grab I see does not get to this red line, I'm not getting involved. It should get to the red line or above if I get involved in any kind of sales. Right? Let's see. Now this red line, our Q zone is active. This red line now might actually confuse us. So rather, I'm going to use a trend line to mark the open. So the open of the Q zone is this. Alright, so the power tree is going on. So price has gone higher than the opening. So I want price to approach either this red line or slightly above before I try to sell. Now we just slightly tapped on it. So I was feeling like, okay, this setup might get bad because it did not get too much inside of it. But all I know is we have to try first. Okay, so seeing that, what I want to do is to go to the 3 minutes and look for a breakout structure. You know what I'm saying? Look for a breakout structure, because we have cleared this buy side liquidity, and we have also gone to premium or the equilibrium of the range, which is a 50% retracement on the fib. So on the 3 minutes, I want to see a breakout structure, and then I'll get involved. All right, so let's see. The breakout structure I want to see is if price breaks this low, I'll get involved. All right, so we kept going, then we broke the low. So looking at 3 minutes time frame, I couldn't find any fair value gap here. So what I did was to check my 1 minute time frame. I couldn't find any, so it was very choppy. All right, so I kept waiting patiently. You know, patience is the game. In the game, you have to be very patient. So I kept waiting, and I saw this fair value gap sitting right here peacefully. So price refused to tap into it. Price kept dropping massively. Okay. So on the 1 minute, okay, rather, okay, sorry guys. So on the 1 minute, before this big drop, around this area, there was a 1 minute fair value gap, right? That's where I got my entry. Okay, that's where I got my entry. So around here, it was very fast, but then we got in here where price retraced back into the fair value gap. So where was our stop loss? I made my stop loss stay just around this high. Why? Because price could retrace. Okay, so it's my stop loss stay there. Price could retrace around there, looking for all of this, so that we don't get stopped out for nothing. So I kept my stop loss that high, you know. So where was I supposed to target? Targeting this low. That was my first target, where I was going to get 80% of my 80% of my trade or my position out. So if I get there, because that's a sell side liquidity, right? So I was thinking of, I thought of leaving a runner, right, to this level, because that's around this Friday low. This green line is here, Friday low. That's another liquidity pool. You're going to take it out. So let's see. We kept going. So now at this level, we had this news balance of trade that was going to happen. Me, I thought, okay, this was either going to push us to our stop loss or whatever, but it just kept playing around. We normally close risk at 1:1, and by now it's not already 1:1. Okay, so by now it's not already 1:1. This is around 0.9. So it's not up to. So I did not close my risk yet. If we hit our TP1, that's when I normally close my risk. So I just let it do its thing. So it hit my TP1, and then we held till that level. Okay, that was 2.7 R. So let's see how it goes. So it kept going down, it kept playing, but it went down. It's our take profits for the day, and that was how I made $400 trading. I risk about 1 point. Okay, so I made 4 point something, because that's 2.7 risk to reward. I made 400 and something, right? So that's how it's all played out yesterday. So today's another new day. This is Wednesday. I'm making this video. All right. So let's see how it goes. I'm also going to show you guys how I'm going to catch what's going to happen today. Everything, just show you my how I normally catch the moves and all of that. So I'm being 100% transparent on this. This is how I caught the move. You can replicate this and go back test it and see how it's going to work for you. Peace out, guys. So if you found this video very helpful and clear enough, do well to like and subscribe to the channel. Peace out.